Welcome. In this video, can Zbcn coin make history if it breaks resistance? We will analyze it. Don't forget to subscribe and please watch to the end to understand. When we carefully examine the chart, one of the most noticeable structures is the formation of a clearly defined resistance level. This level has acted as a critical barrier where the price has touched twice in the past but failed to break through, essentially serving as a wall. In technical analysis, such resistance points represent psychological limits for investors and are typically areas where supply increases, meaning selling pressure intensifies. During the first attempt, the price rose to this level, but was forced to retreat due to heavy selling pressure. After a certain period, the market recovered and made a second attempt at the same level. However, a similar scenario unfolded during the second try. The price reached this level again, but lacked sufficient buying support and pulled back once more. These two failed attempts may have created a shared perception among investors that this is a strong resistance level. But now things seem to be changing. Looking at the current chart data, the price is once again approaching this resistance. And this time the structure looks a bit different from previous attempts. The price is advancing by forming higher lows compared to previous peaks. This may indicate that market participants are now more optimistic, and that selling pressure is being met at higher levels. If this pattern continues, and the price reaches this resistance again, the likelihood of a breakout this time could be much higher than before. It's also important to remember that in technical analysis, the more a resistance level is tested, the weaker it becomes. So, during the third or fourth attempts, the probability of such levels breaking often increases. In this context, the price approaching this level again could initiate a very critical process. If the price manages to break this resistance with strong volume, it would be considered a breakout, which often signals the beginning of a new trend. In such a breakout scenario, especially investors who are aware of this resistance and have been waiting for the breakout might enter the market aggressively with buy positions. This could quickly push the price to much higher levels. Moreover, this breakout wouldn't just be a technical move, it would also positively influence investor psychology. Once the belief spreads that these levels are now behind us, previously hesitant investors may start opening positions, further accelerating the upward move. In conclusion, there is a clearly defined resistance level on the chart that has been tested twice in the past, but has yet to be broken. However, now a third attempt seems to be on the horizon, and this time the picture looks slightly different. If the price manages to break this level, it could be followed by a strong and sustained upward trend. Therefore, this level stands out as a strategic point that should be closely monitored by both short-term traders and long-term investors. But watching the resistance alone isn't enough. Other metrics should also be considered. Stay tuned. When we look at the chart from a broader perspective, one of the key structures that stands out is the ascending trend line within which the price has been moving. This trend line indicates that the price has been steadily progressing upward over time by forming higher lows. In other words, during each pullback, the price retraces to this trend line and then rebounds, continuing its upward movement. Such formations are considered a sign of strength in technical analysis and suggest that buyers remain active and strong in the market. At present, the price is once again approaching this ascending trend line. This is a critical point because investors typically pay close attention to structural support levels like this. If the price receives another upward reaction from this area, it would indicate that the market is still willing to preserve the trend, and that the uptrend may continue in a healthy manner. The reaction here also holds psychological importance, as many investors may choose to buy based on their confidence in this trend line. Ascending trend lines are important areas where prices find support, meaning buyers step in. From a technical perspective, maintaining this line means the trend remains intact. However, if this line is broken to the downside, it could be perceived as a sign of weakness and potentially pave the way for deeper corrections. Therefore, the current stage is quite delicate. The price will either bounce from the trend line and maintain its upward momentum, or break below it and signal a possible short-term weakness. Additionally, these kinds of ascending formations can technically lead to channel patterns or flag formations. In this context, the price returning to this trend line can actually be viewed as a potential opportunity for buyers. Especially considering the reactions seen at this line in the past, a similar move may happen again. At this point, what matters is whether the price can move upward from this support line with strong volume and momentum. Bounces from such support lines often present not only short-term buying opportunities but also signal that the market is in a healthy and sustainable condition. In a healthy uptrend, prices don't move straight up. They occasionally pull back. But these pullbacks are controlled and supported by higher lows each time, These types of movements highlight the strength of the trend and continued buyer interest in the market. In conclusion, the ascending trend line we are observing right now is a very important technical level. The price is once again approaching this line, and a potential upward reaction from here would be reassuring for the sustainability of the trend and could lay the groundwork for stronger future gains. If this support level holds and a strong upward move follows with significant volume, it could mark the beginning of a much larger rally. Therefore, this area stands out as a key level that should be closely monitored by both short-term traders and long-term investors. It is crucial that this ascending trend is maintained and preserved. When we evaluate the chart from a broader perspective, we can see that the vortex indicator, one of the commonly used tools in technical analysis, is currently giving quite striking signals. This indicator provides investors with important insights into the direction and strength of a trend. The vortex structure is an exceptional tool, especially for those looking to identify trend reversal points. At its core, the indicator consists of two lines, one positive and one negative. This is a highly positive development from a technical analysis standpoint. The fact that the blue line remains above indicates that buyers dominate the market and that the upward pressure is stronger. Maintaining this position also suggests that the current upward move may not be temporary, but part of a sustainable trend. In such cases, it's important to consider that this is not just a bullish signal, but potentially the start of a new trend. The vortex indicator offers much more than a response to sudden or speculative movements. It reveals market dynamics, investor psychology, and the commitment behind price direction. The blue line typically crosses above the red line just before a strong bullish wave begins. However, what truly matters is how long the blue line stays above and at what angle. The current chart data shows that this line is not only rising, but is doing so with strong positioning and consistent upward movement. This is a highly significant situation for investors. According to past analyses, when the line behaves this way, it often precedes substantial rallies. Especially during periods of low volatility, such positive divergences can be the precursor to major breakouts. The continued presence of the vortex indicator in this kind of positive structure suggests that prices may be entering not just a short-term bounce, but potentially a longer-term bull market. This indicator is not like a simple moving average that lags behind price. Instead, it moves with price and responds in real time. Therefore, the current strong position of the line reflects a market environment where the core dynamics are shifting upward and buyers are firmly holding their positions. The greater the distance between these two lines, the stronger the trend is considered to be. Right now, the gap between the lines has widened, which provides strong technical evidence that the market is trending upward. Vortex is critically important for trend-following investors. The structure it currently displays is a strong indication of emerging upward momentum in the market. When we bring all these elements together, the fact that the blue line remains above the red line not only tells us that the trend is upward, but also implies that this trend is built on solid foundations and is likely to continue. The blue line maintaining its upward slope clearly indicates that despite short-term profit-taking, the overall direction remains upward. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.